I'll just kick off by saying hello. Good morning to everyone. I'm Madeline with PracticeVital. It's great to see some familiar faces and some new faces. I should mention we are going to record this if everyone's comfortable with that, and we will share it out afterwards, especially for those who weren't able to join live. But thank you for joining us, and we are really excited for the conversation this morning with Nate Hendrikse. I'm hoping I pronounced your last name
That's
correctly.
perfect. Yeah.
Good. Okay, cool. Many of you might know Nate already through the industry. Nate is the founder of Navigator Bookkeeping, and really specializes in helping practice owners find those financial blind spots and understand their financial picture for how their practice is doing and growing. And he has been a wonderful partner in getting to know PracticeVital through some of his existing customers and just through our relationship of trying to get to know how we might be able to collaborate in the future. And I think there's just great synergies from his perspective on how you can unlock some really great insight within PracticeVital to collaborate or feed some of the insights he's gathering from a financial standpoint. So without further ado, I'll hand it over to Nate to kind of talk through his perspective and his recommendations for how you might use that tool to get that financial picture that you're looking to understand for your practice. I will keep a close eye on the chat. If there are questions, since we have a smaller group live here, feel free to, just jump in if you need to with questions. We can keep this really casual, but also feel free to drop something in the chat and we can save some time at the end for some Q&A. Great.
Cool.
So with that, over to you, Nate. Thank you.
Yeah, thanks, Madeline. Yeah, so good to see everyone. Some of you I know already, some of you are new, but good to meet you if I haven't met you before. Yeah, I met Madeline at a conference earlier this year, and we were both from Chicago area, so we were talking, and then I saw the tool PracticeVital, and I was like, wow, this is crazy. So cool. So since I've been super excited about PracticeVital, just because I'm like, hey, I want every one of my clients to be on here because I feel like this is so many helpful insights that we did not have before. So I'm happy to be here, and hopefully this will be a helpful session for you to kind of see how you can tie together all the information from PracticeVital and tie it with that financial data to give you kind of those financial decisions that make sense. And all this information that I'm talking about today is in a blog post as well on the PracticeVital website. So you can find that as well if you're looking for that, or if you enjoy reading rather than listening. And yeah, as Madeline said, please put questions in the chat. I am very happy to take questions kind of throughout. We can break up the discussion with questions. That would be awesome. So I will get right into it then. And as you have questions, definitely pop those in, and you can interrupt me with those, and then we can kind of go from there. But we're going to go through 4 what I call pairings between PracticeVital and financial data. So the goal is that you as the practice owner are really informed, really confident in your decision-making by using these tools, right? And that as you make those financial decisions and those practice decisions, you have as much data as possible and you're able to use it in a helpful way to really move forward and make the right decisions. So we're gonna look at 4 of those today. There's definitely more than 4 that we could get into. There's just so much data that's possible, right? But I think these are 4 that will give you both kind of that high level, big picture view of your practice, while also getting into some of the nitty gritty clinician decisions, pay decisions, even looking into things like expansion and growth. So we'll hopefully kind of hit all the different areas of your practice, but just know there's other pieces outside of these that you can use as well. And yeah, there's a lot to explore here. So I'll share my screen. We're going to kind of look at a couple of these together, and we'll go from there. So starting off, we're going to start off with kind of the high level here. So we're going to look at, first of all, how can we pair together PracticeVital and financial data from just a high level, big picture view. And the kind of tack I'm taking on this is, how do we look at the profit and loss, which is, probably the most common financial tool out there, right? Accounting tool. How do we pair that with PracticeVital and use that to look at some of our financial goals? Now, a lot of you may have had financial goals, made financial goals before, like maybe you had a revenue goal, maybe you had a profit goal, but sometimes those goals it's difficult to know if those goals line up with the real world performance of the practice, right? So if we just set kind of an arbitrary revenue goal, it's hard to know, does that really make sense for us? Is that achievable? Or even, what steps do we need to be taking to get to that revenue goal? So we're going to look right now at how we can kind of look at those two tools together, the practice dashboard here in PracticeVital and a profit and loss, to figure out how to do that goal setting and kind of, get into that process. So first of all, we'll look at just the practice dashboard here, just to look at kind of get our bearings here, looking at sessions over the last couple of months. We can kind of get an average amount of sessions here. But what we really want to look at, and I don't know, Madeline, if this is available to everyone, but there's this beta section with revenue data. And we're going to look at that actually to help dive into this a little bit.
Yep. As you pull that up, I'll just mention this is still in beta. We're rolling it out. I think a few of you probably have access to it already. And if you do not, we can work together in getting you access in the next few days. It's been a bit of a staggered rollout across the EHRs that we support. So if you don't currently have this in your tool, stay tuned and we can work with you one-on-one. But hopefully this is already familiar for several of you.
Cool. Yep. So this revenue view can give you kind of a view of where revenue is, where it is per session, all those things, which is actually some similar data to the profit and loss as well. But what we're going to do is we're going to try to pair together some of this data with the profit and loss. And just to show you a profit and loss, I'll show you a real simple one on the screen here. This is a really simple version of it, but a profit and loss is going to show you revenue coming in. It's going to show you the payroll going out to your team. That's going to show you all of your operating expenses and then what's left over as profit. So when we're looking at this, we're thinking, okay, what should our revenue goal be? It's a little bit hard to get at that, right? It's like, okay, we're at about 40,000 now. Is 60,000 manageable? Is 80,000 manageable? Is 45? Like where do we go? How aggressive do we be? And that's where we can kind of use this PracticeVital data to get at that point, right? So we can say, okay, let's now use the sessions to figure out around where revenue is and around where it should be and kind of what that all looks like. So if you look at the last couple months here, the last 5 months here, and this is all just sample data, but from the sample data, the average sessions per month, we're at about, let me just look at my average here, about 735 per month is about our average number of sessions, okay? So looking at that, we'd say, okay, we're at about 735 sessions. So if for your own practice, these are steps you can go through as well. Look at your last couple of months, 5 or 6 months, figure out where your average sessions are, okay? Get that number. And then what we want to figure out is we want to find what's kind of our dollars per session, right? What's our average rate of reimbursement, basically, if you're an insurance-based practice, or, we can just call it dollars per session as well. So what's the revenue coming into the practice per session? And to find that number, we're either going to take your monthly revenue. So you can take that from the profit and loss, right? So you can take that right here, just top line revenue. Or if you do have that revenue view here in PracticeVital, you could also take it from over there. It should be, they probably will be different numbers, but either could work for this. So we're going to take that total top line revenue. We're going to divide it by our average sessions. So I'm just going to run through some numbers here with the sample company so you can kind of see how this works. And then you can go and do that with your own practice as well. Okay, so I'm going to use the PracticeVital sample data, but then you can go ahead and use your own data. So if we use the sample data here, we're at about 735 sessions a month with 94,000 a month in revenue. So if we divide 94,000 by 735, that comes out to $128 per session. So this is a really important number. That's that average dollars per session. And why this is helpful is this can give us that idea of our goals manageable and how many more sessions do we need to pull in a month to get to those goals. So if we're at $128 per session, we'll write that down, keep track of that. But now let's think about our revenue goals that we're going to set. So maybe we're thinking about 2025, maybe we're thinking about just the rest of 2024, but we're trying to figure out where is this practice going and where do we want it to go? So thinking about that revenue, we're at 94,000 per month right now. If we did that for a year, that'd be about 1.1 million in revenue. Let's say the practice, for some reason, just arbitrary number, wants to get to 1.5 million. Okay, we want to get to 1.5. So we're thinking, okay, how do we get there? That seems like a lot of revenue, right? That's like 400,000 in revenue more in a year to reach that goal. How do we really get there? And this is where we can start to look at this data and figure out how do we actually get to that point. So if we want to get that revenue increase to happen, we need an increase of 241 sessions per month. Now, when you hear that, you're probably like, wow, that's not possible. We're not doing that. There's no way, right? 241 sessions. That's a huge increase. But let's break that down a little bit. 241 sessions in a month. In PracticeVital sample data here, there's 11 clinicians. So if we divide that amongst the clinicians, 241 sessions, that's an increase of 22 sessions per clinician per month. Okay, that still feels pretty decent. But then let's put it into a weekly view. That's about 5 sessions per week if there's about 4.5 weeks in a month, right? So if we wanted $400,000 revenue increase in a year, we need about 5 sessions more per week per clinician. Now, when you look at it that way, it's like, okay, maybe that's doable, maybe that's not. But just as an example there, that's a great way to think through your goals, because instead of kind of just setting a goal that's like pie in the sky, we want to get to $2 million. I hear that from practice owners. Sometimes they're like, hey, I want to get to $2 million. I want to get to 3 million. It's like, well, why do we want to get there? And how do we want to get there? And that's how we answer this, right? Is this tells us how many sessions we need per week per clinician to get to that goal. Now you might do this for your own practice and you might realize that goal is just not going to happen, right? Maybe 5 sessions per week per clinician is just not doable. You might have some clinicians who can crank that out. You might have some who are, full on capacity, but it at least tells you, is this doable for us or not? Okay. So that's kind of the first part. That's the revenue piece. But it really comes down to coming in here using this data and figuring out those average sessions per month, and then the average dollar per session. And using the profit and loss and PracticeVital here, you can find those numbers. And then from that, you can then make that goal. I think we have some more people popping in. So let me just admit there. So that's kind of the revenue piece. That's the first piece. The second one is a profit goal. Now, I would say, just my own opinion, I think a profit goal is actually a lot more helpful than a revenue goal. A revenue goal, your revenue can change greatly, can increase greatly, but your bottom line, what you're actually making as a practice and you yourself as the owner, could decrease, right? Or could stay the same. So I think a profit goal actually could be even more important. So we're going to get into this a little bit more in the second pairing here, but a profit goal you could also use this data for, right? Using that dollars per session average, you could figure out if we know what our profit margin is, where we want to go. You can use these numbers to kind of calculate from that dollars per session, what profit could be for the year and kind of where that's going. Just kind of a margin for you. You probably want to be shooting for about 20% profit. Now that's a pretty high goal. You might be like, that's not possible in our industry, or that's crazy. But I think it is a helpful benchmark. I'd say, even if you're in the mid-teens, low teens in profit, you're in a really good place. But 20% profit should be, I think, a profit goal. It is a high goal, but I think it should be a goal for a practice. Obviously, circumstances change, so your practice might have mitigating circumstances, but I think that is doable in most cases. So you could even say, okay, if we want 1.5 million in revenue, 20% profit margin, you can kind of then work backwards from there to figure out how much profit that then is, how many sessions you need, and you can work backwards to, again, figure out how many sessions you need per week per clinician to get to your goals. So again, this is really just giving you the building blocks and the data that you need to turn a pie in the sky goal into actionable steps. So instead of just saying we need to increase revenue, you say we need 5 more sessions per week per clinician. And whether it's you or whether you have clinical directors, that's a lot more helpful to you and to them in growing the practice, rather than just saying revenue needs to increase. We need more marketing, whatever. You can say, we need 5 sessions per week. We can do that. Let's figure that out. So that's kind of the first piece. And again, that's pretty big picture. Should be pretty easy to do that, right? These are pretty quick calculations, but it can give you kind of those actionable steps there. So I'll do a quick pause there if there's any questions on kind of that first piece.
Nate, quick question for you. Just out of curiosity, do you know or have a guess of, if you're saying 20% profit, what does that look like for the practices that you bump into? Are there folks who are kind of in that range, close to that range, moving toward that range? What have you seen?
Yeah, it's a wide range. We have some practices we see above that. We have many practices who are, I mentioned the teens, like 15%, 12%, somewhere in there. I'd say probably the average, just based on practices that I see, is probably somewhere between 9 and 14%. That's probably kind of the average of like, hey, you guys are doing well. This is really solid. Like I said, I think 20 is like a reach goal in some ways. Like it's not easy. A lot of things have to be locked in as far as your niche, as far as your market, as far as where you're located. But so it's not like I'm saying, hey, if you're not at 20, you're failing, or, you know, anything like that. I think being in the teens is a practice, like 12%, 15% is very solid. And that just might be where your practice is. And again, I think that's probably where the average is, but we see practices at 25, at 30%. Again, that's more rare, but it does happen. And then obviously there's a lot of practices, especially as they're scaling, who might be like 3, 4, 5%. So I think it kind of depends on the life cycle of the practice, depends on a lot of those kind of market conditions. But I'd say, you know, 20% is that reach goal. But if you can get to double digit profit, meaning 10 or more, I think 10% or greater, I think you're in a really solid spot, and it's a spot you can continue building from. Cool. Looks like in the chat here, profit and loss I saw you bring up came from where? That's just a generic profit and loss. We have a lot of historical data, so that's just pulled from there. So just sample data there for that profit and loss.
Does that make sense, Tisha? You know, in PracticeVital, we're not tracking profit and loss, but you're comparing that to your picture and looking those numbers side by side, right? Cool.
Yeah, good clarification. I'm going to show you a couple tools here that are not in PracticeVital, and that's kind of the whole purpose of this original blog post. Now this webinar is how do we pair PracticeVital with other tools to strengthen the data that we're already seeing and use it even more. So yeah, thanks, Madeline. Good clarification there. All right, cool. Well, let's go to the second one then. And if you have other questions, feel free to pop those in the chat. So that's the really big high level view. Now what we're going to do is we're going to get into more of a clinician view. And this is where I think you're going to feel like, okay, these are really actionable steps that I can take to help my clinicians keep moving forward, keep supporting them, and getting them to a place of, yeah, efficiency and profitability. So what we're going to pair together on this one is we're going to go to the clinician metrics tab here, and we're going to see all of our clinicians here, and you can toggle it between these cards or as a table here. Actually kind of like the cards. Yeah, I like kind of seeing all these different pieces, but you know, if you want to have a summarized view, you can see it on the table here. And what I'm going to pair this with is a tool that we created called the clinician profitability tool. And I'll pop the link in the chat for you guys here at the end, so you can all utilize this and download this if you'd like. But it's basically a tool to kind of look at actually really similar data to what you see on here. But instead of looking at like the utilization, retention side of things, session side of things, we're looking at the financial and dollar side things. So think of them as two tools that are showing a lot of the same data, but they're showing different views of it. And that's why we're pairing them together, so that you can hopefully get that kind of fully encompassed view of total clinician performance and what that really means for the practice. So we're going to look at this, we're going to look at that table, we're going to kind of look at them side by side. And really what we're trying to figure out with this is a question that practice owners are all thinking about. What levers can I pull to help my clinicians get to a more profitable place, right? How can I support them? What conversations do I need to have? What structures do I need to change to help support my clinicians to get to more profitability? And that's going to mean more pay for the clinician, more pay for the practice, right? So it's a win-win as that profitability increases for both sides here. So let me show you kind of that tool and kind of what that looks like, and then we'll kind of look at how we'll use those together. So let me zoom this in, because otherwise this is just a lot of data to look at all in one place. So this is the clinician profitability tool. These are the PracticeVital sample clinicians. These are all some nice imaginary clinicians that we're putting in here. So these are the same people and the same data that we're going to see on here, by the way. So we're going to show you kind of how these work together. But basically what this is doing is it's pulling in visits, it's pulling in revenue, and these are just straight from PracticeVital. And I'll show you how to pull those in a second. Then we're going to put in pay structures. So how are these people paid, right? Is it a percentage split? Is it hourly? Is it salary? So I just made those up for this. And then this column here is going to tell us how much the practice keeps. So it's saying of the revenue that Eugene brought in here, how much is the practice keeping? And you can see it's a 50-50 split here in his case. It's then saying how are operating expenses being split up? So we're taking, all of the expenses for the practice, rent, advertising, contractors, everything besides therapists. And we're splitting that up amongst all the clinicians to kind of say, we would like you to cover this slice of pie. Saying pie a lot today. Pie in the sky goals, slice of pie. Got to get some pie today. What slice of pie of expenses in the practice do we want this person to cover? So, if your total expenses are 17,500, what portion do we want each of these people to cover? So that's what this is saying here. And then this is kind of the all important one here. This is saying profit by clinician, right? How much profit in dollars is each clinician making for the practice each month? And then as a profit margin, how much is each person keeping for the practice? And again, we want this to be about 20% or greater. Now there's two people who have zero, they just didn't have data in there. So they're looking like they're very negative. We're not going to worry about them right now. We're going to look at everybody else in here who has data in here and profit margins. So you can see if we just look through a couple people here, we have Derek, pretty low month, right? 1395 in revenue. He's going to look negative because he's just not bringing in enough revenue to kind of cover his portion of expenses. Now, a key thing to notice here is he's not losing the practice money, right? Practice is still making money. He's just not covering his share of expenses. So that's okay. We want to improve that, but it's okay in this case. So that's generally what this tool is going to tell us is how profitable are each of these clinicians. And really what we want to do is we don't want to just look at that and say, oh, that's good or that's bad, though we do want to do that. We want to say, how do we now change things to move these clinicians to a more profitable place? And that's where we can kind of really look at these tools side by side. So I'm just going to do a little side-by-side screen here, and we can look at both of these at the same time. So let's take a look at this. First of all, how would we fill this in, right? If you were going to fill this in for your clinicians, how would you do it? You'd go in here to last month. We're looking at August now. And this completed sessions box here, you would fill those in for your clinicians here, okay? So these numbers look a little bit different. I think we filled it in based on clients seen, but you'd fill it in off completed sessions there, right? So you're just going to fill that in directly from that place. Revenue is going to come also from your EHR. So if you have the revenue goal here in PracticeVital or the revenue reporting, you're just going to pull that up. Revenue, session revenue. Let's do it by compare clinicians, and we'll do it for the last month. We can look at revenue per clinician right here. Everybody's kind of laid out real nice in a table, and we can just put that data right in here as well and give us kind of that view on that side. So that's kind of where that data can come from. So now we have sessions, we have revenue, we're going to put in pay structures, and then we're going to figure out, okay, how does this all work together? So we've put the information in. Now we want to start looking at how profitable are each of our clinicians. And we're going to take kind of a deeper look at anyone who, especially who's kind of below our 20% mark here that we're shooting for. So if we look at, let's see, I think Megan is one we want to look at, if I remember right. So we'll look at Megan. She's actually okay, 27%. Let's look at Whitney. Whitney's at 12% profit margin. So 12% profit margin is fine, right? Whitney is still bringing in $1,000 in profit for the practice, but Whitney's got some room for growth, right? We could ideally get to 20% if possible. So let's look at Whitney. Let's go back to our clinician metric, and we're going to look at Whitney here. And we can click into Whitney's specific box here, right? And we can look at what's going on with this, right? So we have greens on retention. That's good. Churn rate's good. Cancel rate's a little red, 21%. But this is just a quick view to tell us, how is Whitney doing? What do we need to be concerned about? What do we not need to be concerned about? Now, you may just find out that everything on the PracticeVital side is fine, right? Her utilization is high. Retention, again, looks good. She looks pretty solid. It may just be that Whitney's pay structure is too high, right? So this is where these tools can kind of work together, where if we look at Whitney on the PracticeVital side, it's like, hey, thumbs up, Whitney's doing really well. If we look at Whitney on the clinician profitability side, on the right side, we have a little bit lower profitability. And if we look at her pay, she's getting paid 70% of revenue. We're like, ugh, it's a pretty high pay structure. That's why that profitability is a little bit tight, right? So again, that's giving us that other view of it, that other side of it, where this side looks really good, but now looking at the profitability dollars and cents side, we're realizing we probably shouldn't be paying her 70%. Now, how to change that is a whole nother conversation, because if you're going to go to clinicians and say, hey, we're going to drop you down 10%, that's not going to go well, right? So that's a whole different piece, but it at least gives you that idea of who's profitable, who's not. And you can kind of pair that with the data here to see where that comes from. Now, there's another clinician that we'll look at here as an example on kind of the opposite side of that. So if we look at Megan looks decently profitable, right? 27% profit margin. We're pretty happy with that. If we look at her on the clinician metrics here, utilization super low, 15%. Cancel rates, 23%, a little high. Retention rates, only about half, 55%, right? So this is another one where now PracticeVital is giving us more nuance to Megan on this side, because on the clinician profitability side, right on my right side of my screen, I'm like, hey, Megan looks great. She's over 20% profit margin. I'm really happy with that. But if we look at this, we can see, wow, Megan has a lot of room for growth. She's doing fine, but there's so much more possibility there for her, right? If we can get that utilization up, she's shooting for, I think, 100 sessions a month if we look at it on a monthly view. So this is where you can kind of look at both of these side by side. I mean, literally side by side like this, or just on two screens, up to you. But you can kind of see, how do these numbers work together? And it really helps avoid those financial blind spots that you might have. All of us have financial blind spots in our businesses. That happens. But the more tools that we use, and we use them well, the better view we have to avoid any blind spots like that, right? Like if we just look at Megan on profitability side, we'd say everything looks great, no concerns, no conversations needed, she's great. We look at her on the PracticeVital side, we're like, oh man, we need to have a conversation. This is crazy. And right, and we can even see that on this view, we have those little reds popping up, and it gives us a quick idea of, all right, Megan's someone we need to have a conversation with, and we need to coach a little bit to figure out, how do we improve your retention rate? How do we lower this cancel rate? What do we need to do here, right? So again, looking at those two tools side by side can give us a lot of those pieces and jump into that a little bit. I think we do have some questions here, so let's jump into those. All right, Barbara says, what is the discounted OpEx? Discounted OpEx, yeah, we are just discounting the cost for a clinician if they're part-time compared to full-time. So you can see that our part-timers have a cheaper cost than our full-timers, just to make it a little bit more fair for them, make it a little more possible for them to be profitable.
Do you ever, Nate, to that
yeah.
point, do you ever adjust for all virtual versus in person in terms of expensive, overhead costs?
Mm-hmm. Yeah, we don't usually. When we get into location profitability, that's our fourth piece. We'll talk about that a little bit as far as a remote team versus an in-person team and how those costs will change. In this view, I don't, because at some point the formulas and the calculations get too complicated where it's not as helpful.
Yeah.
But yeah, you could do something like that, where you could even say, instead of part-time, full-time, you could say in-person, remote, right? So you could flip that pretty easily to kind of give you an in-person cost versus a remote cost. So yeah, that's a great thought.
As long as that full column is adding up to your total operating expenses, how you're dividing it up really is your own judgment or level of complexity.
Yeah, exactly. As long as you're meeting those operating costs closely, that's all fine. So yeah, yep, I will drop this chart in the chat. Visits is client seen or completed sessions. That would be completed sessions. We put that in, I think, incorrectly when we were just messing around with the data here in this, but it would be completed sessions. Oh, cool. Madeline answered that already. Thank you. And then, is clinician pay before or after taxes? This is before taxes. So that's a great question. This is going to be basically like, what is their base pay, right? So if you have W-2 employees, this is going to show, what's their gross pay going to be, but it's not going to include like employer taxes, benefits, things like that. We have had some clients who asked us to put that in. Again, the calculations at some point get a little complicated, but you could add that in to show that kind of tax burden, the benefit burden to the practice. And let me look at what else we have here. And yeah, this spreadsheet is from PracticeVital data. So, all right,
just
cool.
to clarify on that one, in case, Susan, this is what you're getting at. we don't have an option to export directly into a CV file or a Excel file. So that is something we're looking at in the future. If that's what you're wondering, how do we get it directly exported into, usable data? But I think, Nate, in this instance, you've just been manually kind of cross-checking the two, correct?
Mhm.
Yep.
Yeah, and it's honestly a pretty quick process because you're really only putting in visits and revenue, right? So
Mhm.
it's for visits, you're just coming over here to completed sessions, just popping those right in real fast. And then for revenue, yeah, you're going to go to the revenue sheet over here and see that kind of breakdown of clinicians, and then you can just pop that right in there as well. So I mean, I think it took me, 5 minutes. Might take 10 minutes, depending on how many clinicians you have, but it's a really fast process just because in PracticeVital, the data is pretty easy to see, right? Just in a table like this. So yeah, it's a pretty quick process there. And then, yeah, you need to put in clinician pay. You need to put in operating expenses. There's a couple other things to input. But I think that the overall view and the kind of full view you're going to get of clinician performance is going to be worth, the 10, 15 minutes of data input. It's going to take you, or, you could have an admin do it, a VA. If you have a bookkeeper or an accountant who works with you, they could do it. You can delegate this task pretty easily, I think, to somebody else on your team to make sure these are updated and matching together each month to kind of give you that view. So the main takeaway in my mind from this pairing between clinician profitability and clinician view here in PracticeVital is we want to look at both together to get that full view. Looking at just one of them is going to give you a really helpful view, but there might be pieces that you're missing, right? So looking at all these, looking at the clinician view and looking for those kind of reds and yellows and figuring out who are the people we want to have conversations with, and then pairing that with the clinician profitability view over here and seeing from a dollars and cents point of view, who's profitable and who's not, and how do we need to change that? Those are very related questions because someone who has capacity issues probably has profitability issues. But looking at both views gives you that full context so that when you go to that clinician, instead of just saying, hey, you need to increase your revenue, you can say, hey, I know we've seen that your capacity is a little low, and that might be because of your retention rate. So we'd like to help coach you improving your retention, right? So instead of just saying increase your revenue, you're now saying we know exactly where this is coming from, and let's help you and support you to bump that up. And then you can use these tools together to track that over time, right? So if Megan, like we said, was having some trouble on utilization and on retention, we can track this and show these numbers to Megan month after month as we're kind of coaching and training her, and then also look at how that's affecting her profitability. I mean, if she's going from her current visits to, I think she was at like 15% utilization, right? Yeah. So if we're going to get, let's even 75%, she has so much profitability still in the tank there, right? So there's a lot to happen there that can happen to help support the clinicians to keep them growing here in the right direction. All right. So going to number 3 then, the third pairing. The third pairing is the clinician metric details versus with our kind of sandbox on here, and the sandbox is down here. So let's use Megan as an example. So we're going to click on Megan. This is kind of the clinician detail. I don't know, Madeline, if you have a better word for that or term for this view.
Clinician detail page. Yeah.
All right, cool. I don't want to misclassify things. But using the clinician detail page, we're going to look at specifically one clinician at a time. And what you're going to look at is, Megan here, she's doing well, but she has a lot of room for growth, like we talked about, right? She's at 15% utilization, has a lot more room. Let's say that we're thinking about doing a different pay structure with Megan. Sometimes a different pay structure can incentivize, can be a little bit more fair, just to help this clinician kind of get to the next level. So we might look at this and we might say, okay, she needs some help. She needs some support. Let's think about paying her differently to help her get to that next level. So if using the sandbox tool over here on the right side, what we can do is we can look at a couple different pay structures side by side and see how they work. Are they a good idea? Are they a bad idea? Are they profitable? Or are they not? So I just made 4 different pay structures for her here, just so you can kind of see what that comparison looks like on that side. So the first one is 50%, which is just where she is right now. She's at a 50% split. This one is a 50% split with a $500 bonus per month. So in my mind, that might be, hey, Megan, if you get to X goal, right? So maybe that's a retention rate goal. Maybe that's a utilization goal, but whatever it is, you could set that with her. We will give you a $500 bonus per month, right? So that's what that is, $500 bonus per month on top of the 50%. This is just switching her to 55%. And this is two different tiers. So what we did for this one is the first 5,000, she's at 50%. For anything over 5,000, she's at, I think it's 55%. So bumping her up kind of as she bumps up that revenue. Now, of these pay structures, you guys all are, probably better experts than I am in this because you guys are making these pay structures, but there's so many pay structures, so many options. But with these two, in my mind, the ones that I like the best are ones that are incentivizing our therapists so that as they increase revenue or as they meet goals, they're paid more. Now, you might have lower profit margin as more revenue comes in, but that's fine because there's still more revenue coming in. And your costs are still being met. Everything else is staying the same. So looking at these just from a high level point of view, I'd say this $500 bonus is pretty cool because as she meets those goals, it's very tangible. She gets $500. That should be very motivating to her. And the two tiers could be motivating depending on the therapist. But as she gets past that initial 5,000, she then gets up to the next range, which could be helpful. Now there's so many possibilities here. I've seen, 3-4 tiers of payment. I think kind of the thing you want to be thinking about with your therapist and with kind of your admin side is kind of finding that sweet spot between, is it measurable easily? And can I input it into my payroll software and do all the admin work pretty easily as well, right? So like if we use the $500 bonus as an example, using this detail view, this is really easy because we could just go to Megan every month and say, hey, Megan, here's your detail view. You could print this off. You could email it to her. She can see the goal. She can see where everything is. It's all in a really nice format here for her. And then she can know, yes or no, am I getting the $500 bonus? So it puts the responsibility on her in a lot of ways, right? Instead of it being you or the admin team who has to like track it and use all these different formulas. So this is where I really like this detail view is you can use it to give that kind of accountability and responsibility to your therapist. And even for things like coaching, this is really helpful, right? We know that Eugene here is her supervisor. So maybe Eugene's coaching her. Eugene's retention rate, I looked at before, was like 85%. It's great. So Eugene could be a great coach and say, hey, I'm going to help you improve this retention rate, right? So using this detail view can be really helpful for coaching, for support, but also for pay structures. So this sandbox view here, you can use to really kind of utilize looking at kind of those dollars and cents and figuring out, all right, which of these pay structures make sense, which maybe don't. So if we look at the bonus view here, we can kind of see the differences. So this is how Megan's pay is going to change between these. This is how the practice pay is going to change, so how much the practice is going to keep. And then over here, this is how much the profit margin is going to change. So you can see most of these are in the 30s. She's at 37% right now. The bonus and the 55% are both 32%. And then if we do those two tiers, our margin drops off quite a bit, 22%. So to me, looking at these, I'd say, those two tiers, I don't know if I want to have a 15% profit margin drop. That's pretty substantial. But a 5% drop, if it means that Megan is going to bump up revenue, that could be pretty cool, right? And you can also mess around with visits in here as well. So you could say, okay, instead of 85 visits, what if she does 60 visits? How does that change these numbers? If she does 100 visits. So it's called the sandbox because you're meant to play around with it, right? So using the sandbox, you can play with things, input things. But again, I think it all comes back to making sure that whatever pay structure you switch to, whether this is a new hire or an existing hire, you're giving that clinician data and accountability, right? And this detail view is the perfect way to do that. Print this off, email this to them, have conversations about this, but this gives them that buy-in that sometimes just changing a pay structure does not give. So that's why I really love these two together. This may be my favorite of these pairings in some ways because it gets so much in the nitty-gritty for the therapist of helping them grow, helping coach them, and helping both them get paid more and the practice get paid more as that revenue increases over time. Let me look at the chat here. All right. So Tisha said, are the visits only showing the paid ones or all? I'm not sure how PracticeVital, so that might be a question for Madeline as far as the visits, what that's exactly showing.
Yes, so that would be showing if we're talking visits are the equivalent of completed sessions. Completed sessions is regardless of status on pay. So those are completed sessions, whether or not they've been paid is not accounted for in that number.
Cool. And then, all right, yep. And I think Susan was just replying back to that. All right, great. So yeah, so this view is taking us from, if we think through the 3 pairings so far, first one, as far as the profit and loss and the practice dashboard, that's giving us just full practice views, goal setting, overall practice health, big view. The second one, the clinician metrics, the clinician profitability, this is giving you a monthly view into your clinicians, right? Into their health, both financially and from a clinical point of view. How are they doing? This third one, the sandbox, and then the detail view is getting as granular as we can as far as one clinician at a time. How do we coach and help this person to get where we need them to go? And, depending on how many clinicians you have in your practice, this can be, this doesn't have to be you, right? This could be a clinical director or a practice manager. Don't think that you have to necessarily do all of this. This could be delegated as well. But I think we're going from, you can kind of see where we're going, right? We're going from kind of top of the funnel, bottom of the funnel, as far as big picture to really detailed, granular picture. So those are kind of the first 3. I know I'm giving you a lot of things, but I want to make sure we cover all of them here. And then we get to the 4th one, which is kind of taking it back up to a little bit of a bigger picture again. So, and this is one that may not apply to you. This is going to apply only if you have multiple locations or if you're thinking about going into multiple locations. So the 4th one, we're going to look at the kind of location view. So location profitability versus revenue by location here. So let me go back over here. And we can see here we have group by primary location, right? So I think if I click on this, oops, there we go. That's what I want. We can see the locations for the clinicians here in PracticeVital. We have a Chapel Hill location, Chicago, Durham, remote, and then there's some people that are not assigned to one. So for those 4, Chapel Hill, Chicago, Durham, and remote, I made 4 different tabs here on the clinician profitability tool. So here they are, and it's the same data you can see there. Where this is cool and where this is interesting is a couple of things. First of all, just from a really basic sense, you can see how profitable is each location, right? How's each location doing? You're probably going to have some locations that are awesome and some locations that stink. That's kind of normal. Maybe I shouldn't say stink, just perform less, right? But you could even have a location that's really not doing well, and looking at this data could tell you, hey, maybe this location is not one that we're going to keep up. Maybe we want to put our resources towards a different location that's doing well. But from a quick point of view, you can just kind of see who's doing well, who's not, right? We can look at this. We can see, are there any trends happening by location? Like if we look at Durham here, we have pretty good utilization across the board. We can look at our remote utilization, right? How does that change? Maybe we see we have higher cancel rates on the remote side than in person. You can kind of spot some of those trends, right? Just from a real quick glance. This is over the last 12 months. We also can look at this on a monthly view, right? So that's just the first thing, just see how things are looking at both on the, again, similar to our second pairing from the PracticeVital side, right? As far as utilization, retention, cancellations, how is everyone doing at a glance? Look for those green, yellow, or reds. And then over here on the clinician profitability side, from a dollar amount, how's everyone doing, right? What's our profit margin per location? Now, Madeline's question before was, can we split costs, in person versus remote? And that's where you can kind of decide what you want to do with this. If you do have multiple locations, when you have a location profitability set up like this, you either can just split costs evenly across the board. So, in this case, we just split them by 11 because there's 11 clinicians. But what you also could do, which may be more helpful, is you could split expenses by location, right? So for Chapel Hill, for Derek here, we can make sure that we're including rent, utilities, any food, supplies, furnishings, specifically for Chapel Hill to Derek. And then we can kind of see how that profitability works for him. And then in the same way for the remote team, we're gonna be like, oh man, we don't have hardly any costs, right? We probably have software seats, That's about it, right? We're not going to have rent. We're not going to have utilities. So you can kind of view those separately and see, let's try to split these costs between these different locations to see where are we more profitable, where are we less profitable. Remote usually will be more profitable, depending on the situation and depending on if you can get visits going to remote. But if you can get visits and traction for a remote workforce, that is going to be a lot more profitable. So from the dollars and cents side, you can kind of see that cost breakdown, and then you can pair that over here with the utilization and the retention side to figure out what's the real health of each of these locations through both these metrics, right? And looking at both these, you're going to get kind of that full view. So that's kind of the first way you can use this. The second way, if you're thinking about opening a new location, right? So let's say you want to expand, you're like, hey, really been eyeing up, a city that we want to open in or a new location, something like that. You can use this data on both these tools to figure out what numbers you need to get to profitability, right? So if we're going to do another location, what we could do is we could duplicate this and we could say, okay, we're going to open a new location in Grand Rapids. So let's figure out in Grand Rapids, what are our costs, right? So you could fill out for your operating expenses here, you could fill out rent, advertising, utilities, all those things, figure out where profitability is, and figure out how much revenue you need to bring in to get to that profit. So let's say you have high costs, right? You have rent of a couple thousand, utilities, all those things. Let's say you need to bring in, let's just say 12,000 or 15,000. Then what you can do is using PracticeVital, you can figure out, okay, if we know our dollars per session, which I think was $128, how many sessions do we need? And what kind of utilization would we need for clinicians to get to that $15,000 a month where we're breaking even at our new location, right? So that's where that really becomes helpful, is if we know we need 15,000 and we have $128 per session, how many sessions do we need to get to that point, right? We can just do 15,000 divided by 128. So we need 117 sessions. But looking at PracticeVital, we can figure out 117 sessions. How many clinicians does that need to come from? What utilization do we need from those clinicians? And you can figure out a lot of those things even before you open this location, so that you're going in really with eyes open instead of being like, I guess we'll just hire some people and hope they fill up, right? Instead, we can say, hey, we're going to need at 117 sessions, we're going to need, let's say, 2 clinicians. We need them to be at least 60% utilization, right? And you can kind of fill out all those pieces so that when those people are hired, you can give them specific goals. As they start up, you can coach them and you can keep track of their data and keep them accountable to that. If you have a practice manager, you can give them that data and keep them accountable to it. There's so many uses. I know I'm giving you so many uses, but there's so many pieces depending on how deep you want to go into data and giving that data to the stakeholders in your business, whether those are therapists, whether those are practice managers, whether those are other people. So this location profitability is a lot, again, of some of that kind of forecasting and planning as far as figuring out what do these numbers need to look like? What are our goals here? And how deep do we need to dive into this data to figure all that out?
Quick
All right,
question.
I've been talking a lot. Yeah.
Yeah, I've got a question. So I'm assuming maybe not all the folks on the phone have multiple locations, but I would think, Nate, a similar exercise can be done if you have grouped your clinicians by supervisor team, right? So if you want to, for example, be doing that same breakout or tab view of each of your supervisory teams and see which one maybe is falling a little bit behind in profitability, which one's excelling. Is it time to bring on an additional supervisor even, to divide up some of that staff? I would think it's a similar exercise, maybe a more even split on your OPEX inputs in that case, but kind of the same process, right?
That's a great thought. Yeah. You could do any grouping like that to kind of break it down. I think anytime you break it down into smaller chunks, it makes it more helpful, right? To kind of view that. And right, you have this view is in here very easily, right? Group by supervisor. So you could easily get that data here to figure out what that all looks like. And again, who to support, who not to support, or who needs more support, who needs less support.
It's great.
All right. So those are the 4 pairings. Again, there's a lot more in there, but I think the key thing to take away from all this is you want to use data in a way that there's a lot of data out there for your business, right? So you want to pick and choose. So it's not like you need to go do all 4 of these right now, but it's maybe something that you start implementing over time, right? Like maybe you're really living on the practice dashboard, using this all the time, getting that quick glance at where everything is. Start playing around, getting deeper into those reports, starting to use that revenue report as you get access to that. Start looking into the clinician metrics and the detail view to have those conversations with clinicians. It's not, in my mind, something that you need to all do at once because you don't want to get overwhelmed and just block up your whole schedule. But I think it's something that you can kind of do over time, implement it more and more over the next couple of months until you're really being more data driven than you were. I think that's the goal to get to here over time. Cool. Any questions or anything you're thinking of as we've gone through those?
Maybe I'll just ask the question on, frequency of this type of exercise. Nate, what would you recommend? As we're looking at the end of the year, we're turning the corner into September. Is this a good habit to go through these type of pairings for your practice as you close out the year and look to build that, plan or goal setting for 2025? Maybe you could just maybe reflect on timing of this type of ritual or behavior within a practice.
Yeah, it's a great question. I think the first one we looked at, kind of the goal setting, I think that's something you'd want to do, maybe twice a year. You probably want to set your budget and your goals for next year if you can, end of 2024, October, November. So, maybe do that kind of end of the year, looking to the next year, and then maybe midway through the year, reset those goals because things will probably have changed, right? You might be at a very different place in July than you were in November. You almost certainly will. So I think that first one you could do probably a couple times a year. I think the rest of these, as far as looking at the clinician views, looking at those specifically, I'd have some sort of monthly process if I were you, just where you're taking, doesn't have to be a lot of time, 30, 45 minutes a month to take a look at all these views, take a look at the finances and be like, okay, where are we? Where is everything? And just kind of get that check-in. Again, you don't have to be a financial expert. You don't have to, be a financial analyst. I think you just want to have that time every month where you're really digging deep in the numbers and just being like, hey, where are we? Are we healthy? Where are we going to? And then kind of go from there. So, definitely don't feel like you need to take 5 to 10 hours every month, but I think taking at least 45 minutes, 30 minutes a month would be a really helpful cadence.
That's great. It looks like we have a raised hand here. Sorry, I can't see your name, but feel free to jump right in.
Sorry, I'm Christy. I a super quick question. So I am wanting to look at, and you might have covered this. I've been popping in and out with kid drop off and morning stuff, but what I'm looking at projections for 2025 and I'm struggling a little bit with it. I don't know if you covered it, but just trying to figure out how I can use this data to look at being able to add, let's say, non-revenue producing positions, specifically a biller. We have an office admin who does intake coordination and billing, and we're going to need to separate that out. And I just am wondering if you have any suggestions on how to use this data to be able to forecast and then look at budget.
Yeah, it's a good question. I think, whenever I'm thinking about a forecast or a budget, I always want to work backwards from what's kind of your end goal in mind, whether that's, and oftentimes that might be, what you're paying yourself, what you need to save, what cash flow needs to look like, but kind of working from the end goal in mind, I think is a helpful first piece because all of our businesses need to support us, right? We need them, we need to get paid. We need to hopefully increase that pay over time. So I think first thing is like, what do I need to make? And then from there, then you can build it out. Now, as far as how to use this data, I think, once you have that kind of end goal in mind of, I need to make X amount, the practice needs, some money left over to build savings. Once you've kind of thought through some of those things, then you can use this data to kind of figure out, okay, where, the first thing is just where are we normally as far as how many sessions are we doing per month? What's our dollars per session? What does our retention rate look like? Figure out kind of those averages where those usually are. And then from that point, you can then figure out, okay, if that's where we are right now, and I know I need to get to this point, this amount of pay, whatever that is. What's that line in between, right? So if we're at, 40,000 a month in revenue right now, and we need to get to 60,000 a month in revenue because that's going to allow me to pay myself enough to save enough. Then using this data, you can figure out, okay, we need this many more sessions. We need this much, we need clinicians to be generally around this amount of capacity or retention. And you kind of use that data to figure out those places. So yeah, figure out where you want to go, what that looks like as far as your own personal goals, practice goals, figure out where you are right now, where those averages are. And then you can use this data to kind of figure out what's that line between those two and how do we make that happen?
Got it. Do you put when you're doing the cost of goods sold, or you're doing like the total cost per month, are you including your non-revenue positions, producing positions? So like my office admin, things like that.
OpEx, yeah, OpEx, I would include everything besides therapists in their pay and benefits. So yeah, admins, owner, everybody else would be included in OpEx.
Thanks.
Don't you
Cool.
pay admin on a payroll account? Is the admin not included on payroll?
Yeah, no, they oftentimes will still run through payroll, but we wouldn't include them as like a cost of service. We'd include them
Okay.
as an operating expense. So it's less of how they're paid and more of just kind of where we're putting them on there.
Okay,
So
got it.
mhm. Cool. I
Question.
will. Yeah.
Sorry, last question. Just someone just brought this up a second ago and it got me thinking. One of the things I hate about my EHR is that it doesn't do forward projections. And I was wondering if there's an idea that maybe at some point there would be built into PracticeVital to do forward projections if everything stays exactly as is, which obviously we hope it doesn't, but kind of just like you just said, like mentally doing it. And I think I'm probably not the only person who's like, I became a therapist because math is not my strong suit. So is there potentially something that is able to do this for me at some point?
Yeah, definitely. No, we've heard this feedback a few times now, and it's we're really at the stage of trying to learn about, like conversations like these. How all are you looking to use the tool, and what would be most valuable to build out projections, and that exercise of being able to put the math together a little bit more literally in the tool is definitely something that we're exploring. It's just at this point, the degree to which we would require you to input some of those things versus work in your other tools and sort of compare it in an automated sense. It'd be a little bit more tricky since you'd be inputting data instead of just pulling from the EHR. But short answer is yes, we're certainly exploring and collecting feedback on how that would add value for you all. Cool. And we did have one question from Susan. She may have dropped off already about clinician access. That's one feature we're also exploring currently on whether or not we would, whether you all would be interested in having a limited access for a clinician to see just their page or just their data in order to access that information a little bit more readily than the download feature. So it's something we have in the pipeline and are looking into currently. But otherwise, we would recommend bringing your admin team or leadership team in as users on the tool, people who are going to be in there most frequently, helping you understand and work through these exercises, and then sharing out on a person-by-person basis their information as frequently as you'd like via that download tool. Great.
right.
But we are, unless there are any other questions, I don't see any other hands raised or anything in the chat, but I do want to just thank Nate for joining us today. This has been incredibly helpful. I've learned a lot in this conversation, and I think these pairings are just so beautifully aligned for how we can hopefully add value for you all or give you at least food for thought for the future. I see Nate just dropped that worksheet in the chat here. I'll also follow up via email for you all and anyone who wasn't able to join us live, a link to the recording, a link to that spreadsheet, and as well as Nate's blog post, which he mentioned, which sort of spells this out in written form if easier to digest. And reach out to either of us or the team at PracticeVital or Nate and his group in terms of additional support that you all might need or questions that come after you're able to digest this a bit further. But we love meeting with you all and love learning from you all and how you're benefiting from these tools, and hope to help you in your journey and your goal setting for the future. So thank you.
Thank you.
All right. Thanks, Nate. Okay, take care, everyone.